Japan's economy is suffering its worst slump since the March 2011 earthquake. After a high-profile start to Abenomics, the slowdown could be worrying proof its economic plan is running out of steam. Well, maybe not. Both Abe's government and economists were expecting a slowdown in the second quarter after an unusual hike in the country's sales tax. The GDP number was better than the consensus forecast of minus 7.1%, but it's still a hefty decline. And it raises the question of how much and how quickly the world's third biggest economy can make a comeback. Recent indicators suggest the recovery is still patchy, with consumption still lacking momentum and exports a major weak spot. That's prompting economists to lower their growth projections. The latest Reuters poll showed the median GDP forecast for this fiscal year was cut to 0.7% from 0.9% in the previous survey. Schulte Research CEO Paul Schulte.
The Bank of Japan's communication to the market to make good on its commitment to reflate the economy, I think, is a much more important issue right now than these third arrow reform issues, which Abe is trying to get through the government.
Recent market moves suggest people still have faith in Abenomics and the BOJ's bazooka stimulus. But if the economy fails to recover much from here, it won't take too long for investors to give Abe the cold shoulder.
Yannick Naud joins me from Sturgeon Capital. It's a really delicate balancing act, this, isn't it? Because obviously they want the tax revenue,
yes,
but they're not going to get the tax revenue unless people go shopping. Do you think this version of Abenomics is actually working?
Well, I mean, we have seen the most successful part of the Abenomics last year because the market went up, the Nikkei index went up by more than 50%, and we have one of the reasons why is because the currency moved down quite a lot. I think the currency moved down 16% since Shinzo Abe got elected. Obviously, the second part, which is structural reform, it's much more hard to come by. I think the raise of the VAT tax was needed. I mean, Japan is one of the countries with the highest debt to GDP ratio, so something has to be done. Obviously, we have seen some displacement in demand from the first quarter into the second quarter because a lot of big ticket items like car or white goods have been bought during the first quarter and not during the second quarter. But all in all, the number seems very, very high, but it balanced the first quarter that was up 6.1%. So all in all, we're flat since the beginning of the year.
It is the third largest economy in the world. How important is Japan to the rest of the world? And that's not a trick question. I mean, it can be the biggest, but it can be quite isolationist. Does the rest of the global economy depend on Japan being successful?
Japan is one of the most exporting countries in the world. So what is very important for Japan is, will they be able to export again? Right now, we have seen some positive number in terms of corporate earnings. I think the earnings season is we're nearing towards the end. 58% of companies are beating a profit estimate, so it's a good sign. But the negative we had today, for example, is the export were down 1.8%. So Japan have to find a way to export again, to be competitive again. Maybe the only way to do so is to cheaper again the yen. It's a possibility. I think Bank of Japan could do some further monetary easing in October this year in order to try to push the yen lower to help export.
That was going to be my next question, because that's when people expect it, don't they, in this autumn. What kind of move do you think they'll make? Will it be quite a serious one? Because again, you have to be very careful with currencies.
Well, I mean, right now, you have to keep in mind that the Bank of Japan is already having a very, very easy monetary policy. I think they buy something like 70% of every government bond being issued every month.
Yeah.
So they could do more. They could inflate the monetary base as well. There's a lot of tools that they can use to try to push the yen lower because right now it's what the country needs.
But what you don't want to do is have a sort of race to the bottom, do you, as far as currencies are concerned? And that wouldn't be allowed, would it, by other currencies as far as the yen's concerned?
Well, it's true that no one wants the currency to be very high. But look at what's happening in Europe. I mean, most of the earnings were impacted by the fact that the euro was too strong. So there is always a pushback. If one country starts to push the currency lower, you will see a lot of industrial lobby trying to push other trading partners to do the same. So all in all, you can't really change things. But it worked in 2013. So far, the yen has been, I think, is up almost 3% versus the dollar. We see the effect, which is zero growth this year.
Yannick Naud, thanks so much indeed. Stay with us and we'll talk later in the programme. Thanks for the moment.